This is Nightly Business Report with Sue Herrera and Bill Griffin.
Profit power. Earnings from some of the biggest blue chips send the Dow soaring by more than 500 points.
Orange is the new green, and Netflix is seeing plenty of it, crushing earnings estimates and sending one of the best performing stocks this year even higher.
New options. Medicare open enrollment is underway, with some insurers now offering benefits to help keep you out of the hospital. Those stories and more tonight on Nightly Business Report for this Tuesday, October the 16th.
Well, good evening, everyone, and welcome. Wall Street was firmly in rally mode today. The gains were broad, seen in everything from technology to financials, and the rise was sharp thanks to strong quarterly results from some of the largest U.S. companies, including United Healthcare, Johnson & Johnson, and Goldman Sachs. We'll have more on those results shortly. But first, here's the closing numbers for you on a very strong day for the Dow. It advanced 547 points to 25,798. The Nasdaq added 214. That's a gain of nearly 3%. And the S&P 500 was up 59.
And the positive earnings news continued after the bell tonight when Netflix, which has been one of the best performing stocks this year, blew past earnings estimates and added a lot more subscribers than expected. The streaming service earned 89 cents a share. That was 21 cents better than estimates. Revenue was up 34% to nearly $4 billion. And not surprisingly, the stock took off in initial after-hours trading. Julia Borston is outside Netflix headquarters in Los Gatos, California.
The big surprise in Netflix earnings, subscribers are growing far faster than anticipated and expected to continue to outpace projections in the fourth quarter. The company adding 7 million subscribers in the third quarter. That's 2 million more than the company's own projections. And looking ahead to the fourth quarter, Netflix says it expects to add 9.4 million new subscribers. That's more than the 7.6 million analysts anticipated. CEO Reed Hastings saying in his letter to shareholders that they under-forecasted memberships due to greater than expected acquisition globally, with strong growth broadly across all markets, including Asia. He pointed to the breadth of local language programming and content from the company's own film and TV studio, shows such as Stranger Things and The Ranch, which reduce the company's reliance on outside studios and give Netflix more control over the content they create. Julia Borston, Nightly Business Report, Los Gatos, California.
But it was results from United Healthcare, Johnson & Johnson, and Goldman Sachs that helped propel the Dow and the broader market today. And what really got investors in a buying mood was their upbeat outlooks. A wave of merger deals propelled Goldman Sachs Group to a big third quarter, with profits and revenue both beating estimates and both higher than a year ago. Investment banking revenues rose 10% from a year earlier, but as Lloyd Blankfein hands off to the new CEO, David Solomon, this month, Goldman is focused on its consumer banking business to find growth moving forward.
A quarter of the employees are engineers, technology engineers. So there's a big digital push here at the firm. A lot of it's happening on the consumer side, the wealth management side, which is obviously not historical Goldman businesses. Right. And so I think that's where there's going to be growth.
Johnson & Johnson says consumer sales, its best in 2 years, are driving growth right now, up 6% from a year earlier.
We relaunched our iconic baby franchise brands. It's much more receptive to the needs of millennial moms and dads. And pharmaceuticals, I just can't say enough about that division for us.
Sales of Johnson & Johnson's treatments for cancer jumped 36%. J&J also raised its guidance for the year. The nation's largest health insurer, United Health Group, also beat earnings forecasts on both lines. Revenue rose 12% from a year earlier, and profits were up 28% in a year. The company says prospects are good for continued growth of its Medicare Advantage health plans and its pharmacy benefits manager, Optum Rx. And all three of those stocks rose sharply in trading today, with United Healthcare the top performing Dow stock today, up more than 4.5%.
But it was a different story for IBM, which late today reported weaker than expected revenue. Big Blue's bottom line earnings were better than expected. They came in at $3.42 a share, but revenue declined in the most recent quarter to a little over $18 billion. And that's what investors chose to focus on in initial after-hours trading tonight. Josh Lipton has more for us now.
$4.1 billion. That is how much revenue IBM's Global Business Services segment generated in the quarter. That's an important division that includes services like the company's consulting group. CFRA's David Holt, an IBM bull, says he liked what he saw there, that the segment showed promising signs of stabilization in the quarter. He was, though, disappointed, he says, by the lack of overall revenue growth for the company in constant currency. For Nightly Business Report, I'm Josh Lipton, San Francisco.
Walmart's profit will be hit by its largest acquisition ever. The retailer lowered its earnings target for this year and next following its purchase of the Indian e-commerce company Flipkart. Walmart purchased Flipkart for $16 billion and said at the time that it was a long-term investment in a fast-growing market, but that it could depress earnings in the near term. Nonetheless, shares rose 2% today.
So overall, Wall Street's expectations bar has been set pretty high for this earnings season, and so far, for the most part, companies have been surpassing it. Bob Pisani explains why.
Rising costs are front and center for investors, but revenue growth could be the answer that companies are looking for to combat the higher costs corporate America is now facing. Earnings season's begun. So far, the early signs are looking even better than the bulls were expecting. Out of the first 41 companies in the S&P 500 reporting, almost 90% have beaten on earnings, with earnings growth of about 25%. That's according to the Earnings Scout. That's above expectations. But the key to the market's upward momentum may be in revenues, not earnings. Why? Because higher costs without higher revenues can lead to margin erosion, and that can be a rally killer. You don't want that. But the revenues have steadily improved as the economy has strengthened. Revenue growth historically has averaged maybe 3 to 5% a year. Now we're looking at estimates of 7 to 8% for the next few quarters. That makes the company's job a lot easier. With revenue growth in the 7 or 8% range, an increase in costs of, say, 2% for higher wages or interest rates can be absorbed. Last week's market action tells us that investors are clearly worried about a sudden spurt in interest rates. So Bank of America Merrill Lynch just released its Global Fund Manager Survey, which showed that the biggest fear for money managers right now is still the trade war, but rate hike fears are a close second worry. The bottom line is this: if we continue to get strong and steady revenue growth, it means the economy is still in good shape and tax cuts are working. That should help offset higher rate concerns. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
A stunning report on the labor market tonight, where there are now more job openings than ever. The latest Labor Department survey shows 7 million available positions in August, a reflection of an historically tight labor market. The number of available jobs outnumbers people actually looking for work by more than 900,000. That's the biggest gap on record. And economists say the new reading could pressure more companies to raise wages to attract employees.
All right, time to take a look at some of today's upgrades and downgrades. And we begin tonight with shares of Tapestry. The parent company of brands like Coach and Kate Spade was upgraded to buy from hold at Needham. The analyst there cited valuation after a recent double-digit decline in that stock price. So the new price target is now $50. Tapestry shares rose more than 3% today to $44.47. Cracker Barrel was upgraded to outperform from market perform at Telsey Advisory Group. The analyst expects the restaurant chain's comparable sales, customer traffic, and earnings to improve. Price target $175, and Cracker Barrel shares finished up nearly 3% to $157.28 today. And Symantec was upgraded to market perform from underperform at Cowen. The analyst says that the stock may not fall much from current levels, even though the company does still face some challenges. Price target $21. The shares rose more than 4% today to $20.66.
Still ahead, is offshore drilling the answer to high oil prices? We'll take you on an exclusive tour of Shell's largest floating oil rig in the Gulf of Mexico.
A new report today that said that China continued to trim its treasury holdings in August by nearly $6 billion. This is the fourth month of declines. It now stands at its lowest level since July of last year. Bond traders have been watching very carefully to see if China is intentionally reducing those holdings because of the trade war with the U.S., but most do not think the reduction is meaningful enough yet.
President Trump took aim at the Federal Reserve again, calling the central bank his biggest threat because he believes it's raising interest rates too quickly. In an interview, the president added that he's, quote, not so happy with some of the people he appointed to the Federal Reserve other than Chairman Powell.
And the federal government late yesterday said that it wants to force drug makers to disclose prices for prescription medicines in their television commercials. Health and Human Services Secretary Alex Azar said today that making pricing more transparent might force drug makers to slow future increases. And he said this, by the way, would apply to all brand name medicines covered by Medicare and Medicaid.
We think you have a right to know not just when you have the TV ad what the drug ought to cost, but actually at the point of prescribing, when you're there with the doctor, we need to get the tools so the doctor knows not just the list price, but also what under your health care plan you would pay for that medicine, as well as the competing medicines the doctor might prescribe, so you can have a more engaged, competitive discussion right there at the point the script's getting written.
The drug industry has objected to this proposal.
Medicare enrollment is currently underway, and this year some private insurers are offering a new option designed to keep you out of the hospital. Bertha Coombs explains.
Manuel Rivera has had his share of hospital stays, which were, in a word,
lousy.
When the 87-year-old developed a serious infection last spring, he was relieved when doctors at New York's Mount Sinai Health System offered to hospitalize him at home.
How are you feeling today?
I'm feeling very tired.
A nurse administered his treatment just like in the hospital, but better, Manuel's daughter says.
They have that luxury of a one-on-one. They were able to do their job like at a fuller capacity instead of having all these other patients around.
And Manuel could actually sleep.
You can go to the bed when you want. And they still got so many people don't walk around make noise.
Mount Sinai's CEO says the home program resulted in 25% savings on average, and data show readmissions were cut in half.
We found that patients were happier, costs were lower, outcomes were better, and the patient satisfaction was higher. So on every metric we measured, this was a better way to deliver care.
But the pilot program was funded by a Centers for Medicare and Medicaid grant, and funding ran out.
Insurers who sell private Medicare Advantage plans have signed on to cover the hospital at home program starting in 2019. But the federal government's traditional Medicare program isn't there yet.
I think the concern might be, whereas a Mount Sinai might be able to do this easily, not every hospital may have the resources or the operational expertise to do it.
Part of the problem is that under traditional Medicare, hospital and outpatient services are billed differently. And CMS Chief Seema Verma noted in a speech to insurers that Medicare lacks the ability to provide prior authorization for treatments that private insurers have. Still, the administration has given Medicare Advantage insurers even more flexibility to provide more home care supplemental benefits for things like housekeeping, daycare services, and caregiver support.
It really depends on the type of care that you're requesting, but it can easily run into the tens of thousands of dollars. So to the extent that the Medicare Advantage plan can offer and help cover some of those services, that could certainly be a financial benefit to some people.
Analysts say the insurers are rolling out the new options slowly for 2019 and will likely ramp up offerings next year to help more seniors like Manuel stay healthy at home. For Nightly Business Report, I'm Bertha Coombs.
And healthcare will no doubt be one of the issues on the minds of voters when they go to the polls next month. And this year, the recently enacted tax cuts are also having an impact in some close midterm races. Ilan Mui is in Downers Grove, Illinois for us tonight.
In this suburb of Chicago, politics is at a crossroads. For more than a decade, this area has been represented by Republican Congressman Peter Roskam. Now, he's struggling to hold on to his seat.
How are you?
Few people thought the race would be this close. Roskin was one of the chief architects of the GOP tax law, and he says it's spurring places like mining company Vulcan Materials to create jobs, boost wages, and invest in new equipment. The economy is so hot, business owners tell him their biggest challenge is finding enough workers.
At its core, this tax law is about growth. And what the other side of the aisle decided was they are all about the politics of redistribution.
But the GOP tax cuts are getting overshadowed by President Trump, and Roskin is falling behind in the polls to a political newcomer, Sean Casten. Casten used to run his own energy company. He decided to get into politics after Trump was elected, and he's turned the tax cuts into a line of attack.
You're not supposed to be running huge deficits when unemployment is at lows and we're at a 9-year economic boom. And we're at that point because we basically put fuel on the fire of a booming economy.
Affluent, well-educated swing districts across the country will be critical in determining which party controls the House. There's only 3 weeks left to go until Election Day. Candidates don't have much time to make their case. For Nightly Business Report, I'm Ilan Mui in Downers Grove, Illinois.
A congressional vote on the new trade deal between the U.S., Canada, and Mexico will not happen this year. Senate Majority Leader Mitch McConnell today cited procedural issues. Under Trade Promotion Authority, certain steps have to be taken before a trade deal can be sent to Capitol Hill. That leaves the issue in the hands of the next Congress.
The world's largest asset manager reports a decline in revenue, and that's where we begin tonight's Market Focus. BlackRock's revenue totaled about $3.5 billion for the quarter. That was less, though, than Wall Street was expecting. The company said that the miss was due in part to an acceleration in investor outflows.
We saw huge movement from clients, a lot of churn, and it was just, I think the markets are showing that investors are confused, but overall, because of expense discipline, because of how we've navigated, our revenues were up 18% in our Aladdin business and our technology business. So overall, it was a good quarter, but I was disappointed in our net flows, but very explainable by some large de-risking.
BlackRock shares fell more than 4% today to $408 even. And Morgan Stanley's profit rose 20% in the most recent quarter, easily topping analyst estimates. Results were helped by a strong economy and revenue gains across its major business units, including investment banking. Morgan Stanley shares rose more than 5% today to $45.94. And sales at Domino's were weaker than expected, underscoring increased competition for food delivery these days. The company has stepped up its efforts to better compete with third-party delivery companies like Grubhub and Uber Eats and DoorDash. And earnings for the most recent quarter did top estimates. Still wasn't enough, though. Domino's shares fell nearly 5% on a big up day to $259.63.
W.W. Grainger says tariffs on imports from China are expected to increase costs by about 2%. The industrial supply company is considering raising prices and finding alternative sources for its products to offset those higher prices. W.W. Grainger reported a decline in profit and weaker than expected revenue in its most recent quarter. The shares fell nearly 12% to $280.01. The New York Post is reporting that billionaire investor Carl Icahn has taken a significant stake in discount retailer Dollar Tree. The report said it was unclear whether Icahn plans to push for management changes or strategy changes at the company. Dollar Tree shares popped more than 6% on the report to finish the day at $86.50. And United Continental beat analysts' earnings estimates and boosted its 2018 forecast for the third time this year. The company said its results were helped by added flights in its hubs in Chicago, Denver, and Houston. The stock rose in initial after-hours trading after rising more than 2% in the regular session.
Tensions out of Iran and Saudi Arabia drove oil prices slightly higher today. The price of domestic crude settled just around $72 a barrel. But as prices rise, so too are the investments being made in offshore drilling, because it's those very same investments that could help keep oil prices in check. Brian Sullivan is on a Shell rig in the Gulf of Mexico off of the New Orleans coast for us tonight.
We got a rare and broadcast exclusive opportunity to be on one of the biggest oil platforms in the world, the Shell Olympus, in what they call the Mars Field, about 130 miles out of the Gulf of Mexico. New Orleans, by the way, is that way. And this is a fascinating world because, as the CEO of Shell told CNBC, everything about the Deepwater Gulf, which is what they call this, the wellhead about 3,000 feet down that way, is big and it is expensive. A platform like this, over $1 billion. Shell, by the way, has a new one rolling out next year. They're investing $3 billion over the next 5 years. And after the price of oil collapsed a number of years ago, the whole deepwater and offshore industry really had two options: get smarter about costs or go away. And the head of Shell's global deepwater operations told us they have brought the price from a barrel of crude from $75 on their costs way down to about 40.
Today, we've been able to bring these costs down by anywhere between 45 to 55%. When you look at an activity today, it won't screen in deep water for anything more than a $40 per barrel break-even price. On average, our portfolio is running just under $30 a barrel at the moment.
The price of a barrel of crude above 70 and their costs around 40, they can invest in more projects. Like we said, that's what they're doing, $3 billion over 5 years. And you wonder, what do they get out of it? Well, a platform like this, the Olympus, is about 100,000 barrels a day. A little portion of that goes to the government. About 21% goes to their partner, who is BP. Overall, this platform will produce roughly 2 million gallons of gasoline for your car every single day. And as the profitability has come up, investment has come back. If you look way off in the distance over there, there's a platform that looks like this one, but in the middle, that's a drilling rig. They're actually drilling for a new well, and then a platform kind of like this will ultimately go on top of it. Now, of course, there's something else that this industry faces, and that is safety concerns. After the BP Macondo disaster, where 11 lives were lost and a massive oil spill, the industry effectively shut down here for the better part of 2 years. Well, we asked Shell about that, and they said that the safety and the technology, especially around that wellhead, has gotten a lot better.
As an industry, we've improved the technology of the blowout preventers that sit on the sea floor that actually prevent from these things from happening. We've created organizations like the Marine Well Containment Company that can come in and cap these wells if anything ever happened. But of course, we're focusing on making sure something like that never happens again.
So the industry is working its way through safety concerns as well as bringing costs down. Of course, the Trump administration has been very supportive of the offshore oil and gas drilling industry. We'll see how long that lasts. Of course, if oil stays high, the investments will come here to the Gulf of Mexico. If the price of oil, though, were to turn back down south, look for new investments like this to slow down as well. A lot of jobs are reliant on platforms out here just like this one. For a Nightly Business Report, I'm Brian Sullivan, off New Orleans, Louisiana.
And coming up, the life and philanthropy of a Silicon Valley legend.
Wall Street banks are reportedly telling Uber that it could be valued at as much as $120 billion if it goes public next year. At that level, it would give the ride-hailing company a shot at being the biggest initial public offering on record. That figure is higher than the valuations of Ford, General Motors, and Chrysler combined. And according to the Wall Street Journal, it's twice as high as the valuation Uber achieved during a fundraising round 2 months ago.
Facebook is facing a new lawsuit. According to a complaint filed by some advertisers, the social media company knew of problems with its video consumption metrics for more than a year before it disclosed them back in 2016. The lawsuit alleges that Facebook engaged in unfair business practices and significantly overstated the amount of time that users spent watching video ads.
The business world today has been mourning the passing last night of Microsoft co-founder Paul Allen, who succumbed to cancer at the age of 65. He made his mark on the world as a philanthropist and an entrepreneur after leaving Microsoft in the 80s. Robert Frank takes a look at his lifetime of achievements.
It was 1975, and a 22-year-old Paul Allen and 19-year-old Bill Gates wrote a programming language for the Altair computer that would later become Microsoft, installed in 90% of the personal computers by the 1990s. Allen left the company after 8 years to battle Hodgkin's disease and then channeled his fortune and energy into technology and media companies, space exploration, museums, developing Seattle's Lake Union District, and of course, buying the Seattle Seahawks and the Trailblazers. He gave more than $2 billion to charity, and his estate is likely to give even more since he signed the Gates-Buffett Giving Pledge, promised to donate most of his $20 billion fortune. Now, he had no children, and Vulcan Inc., which holds his companies and his investments, will likely pass to his sister Jody. But she has said she may not be interested in owning the teams, so those could be up for grabs. Some of his personal trophies, like his 414-foot yacht Octopus, his fleet of private jets, and his 15-plus mansions scattered from Mercer Island in Seattle to London and France, could also be sold, with the proceeds going to charity. For Nightly Business Report, I'm Robert Frank.
All right, one more look at the big rally on Wall Street today. Thanks to the better-than-expected earnings, the Dow advanced 547 points. The Nasdaq added 214. The S&P was up 59.
And that'll do it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. See you tomorrow.